Hey everyone, Nick Shaheen here looking at Beyond Meat. BYND is the ticker. I haven't done a video in a while and somebody just nudged me about it. Hey, can you do an update? Here it is. So I don't have a position on it, so the opinion is honest. I have traded it from both sides, long and short, more long than short uh, at times. I have not looked at their fundamentals of late, so let's take a peek before we talk charts. Okay, so by definition, this is a growth stock because they're trying to establish something that wasn't popular before. And the blue lines show that indeed the revenues are growing. Profit margins are stagnating, but that's okay. Um, Net income, I don't look for it yet. I don't care for them to be profitable. I just want them to be headed in the right direction. 2020, brought a lot of talk about upside potential because of the quarantine. I never understood why, because the argument for it in the media was, hey, nobody can produce real meat. And I'm thinking, okay, so how can they produce fake meat if they can't produce real meat? But anyway, it was a non-issue. Income statement looks, let me see here, revenue 32, 87. You can see, right? So growth it is. So whenever I'm looking at a growth company, I don't look at what happened here. That's weird. That's twice today. I don't look at the PE. I look at the price of sales, and I can't seem to get it right now. Every time I click on that, it errors. Give me the statistics. Nope, it goes away. Okay, so I don't know what the price of sales is. As long as the price of sales is not astronomical, and these days, to give you relative performance, Amazon is a freak of nature at only 4. Apple, Facebook, and all of those guys are plus or minus 10. And Tesla is in the low 20s. So 20 years worth of total sales are built into the Tesla stock price today. How much of that is in Beyond Meat? I've seen 30s. Zoom was over 100 last year, and I freaked out about it. Now it's more in line. There are a few up there. Those are the ones I shy away from. That's expensive, and not necessarily from the value of the stock. It's just how much froth is built into the stock price today. So if somebody owns the stock and is expecting 30 years worth of sales, giving it credit for 30 years worth of sales today, the smallest hiccup will disappoint that person, and they'll sell. So that's why I don't want that number to be high. All right, so this is a daily chart, about a year's worth of data. And without needing to know how to read charts, you can see that it's somewhat flat on the bottom. So they're trying to hold the floor. That's good. I can count on it as floor. But I should stop myself out as soon as that floor gives way, because I don't want to find out what's below it. Technically, if a floor this solid is lost, it means that the bulls are really tired and the bears might overwhelm them. And if they overwhelm them, the drop could be drastic. So I don't want to know what's below the floor. Luckily, we have 2 mini floors. One right here at 123 and one serious floor at 113. I do not want to lose that floor because they'll go back and fill the gap down to 101, and then we'll talk in the 2 digits. Technically, the target will be much lower, but I learned not to say these numbers in YouTubeville because people get pissed off. Don't know why. I mean, it's only a stock. Anyway, it does have resistance on the way up. So the rally, where it is right now, it's stuck in muck. Let me explain. This orange line, I did not draw. This is the actual point of contention as measured by the volume profile. So there's something called the volume profile. It shows us all these volume bars, where they happened, at what price. So that's meaningful information because it tells me that at this level, the buyers and the sellers have been most active. So they're not going to cut through it like butter. The most active, it means it's like a magnet. It's like stuck in mud. They can't just, it's like they have to work hard to break out of it. Usually headlines break them out of it, or like an earnings report or something. They need a nudge. It's not easy to burst through. So if I take a long position, I should have time on the clock. If I believe in the company and I want to catch a swing higher, I shouldn't buy like next week's options or the week after. Why don't I pay up a little bit more and put some time on the clock? That's my opinion. So 138, is that a hard line in the sand? No, it's a whole region. Look at it. So everything above here is resistive. In fact, the first trigger that they've done well is above 142. So okay, they're making progress. The first line that had failed is 135.8. So write these numbers down if you don't know how to read these charts. So 142.4-ish, 142 was the prior fail above that. And then you go to the next zone that's really tough, is into 150. Now if they break free of 150, now they run into not open air, but more open air. So they have room to breathe, and the bears are losing steam. So the bulls can have their way, so to speak. It's not going to be a shot up. So it will be like an attempt, a failure. If they maintain a higher low like they have here, if they can maintain it, then they can make progress and chip away at these lines I just mentioned. What was it? 142, and then repeat the processes into 150, because there's one big one at 148 and then 150 top. And then you deal with these, whatever the heck happened here. If somebody bought here, I question their ability to separate emotions from actual logic. Never in my life have I, no, I shouldn't say that. Never will I, from here on out, from years on out, would I ever chase a stock there. Because this is where I should be able to be smart enough to say, you know what, dang it, I missed it. I can be upset. I can throw a fit, throw a pencil across the room or something. But I missed it. I'll wait for a retracement. It's not ideal. So it would be suboptimal. So if my mother comes to me and says, hey, what do you think of Beyond Meat up here? I was like, nope, not with my money, or not with your money. So if it's not an obvious point of entry, I just shouldn't take it. And if I do take it, I should stop myself really quickly, and I shouldn't double down here, because anyway, this is not a sure thing as far as a stock. If it's a tangible value that helps, supports the price action, then I would double down at certain levels and certain intervals of time. Anyway, the reason why I don't double down here, because this drop happened too quickly. I need time for it to mature. Sure enough, if somebody waited a little bit, they could have doubled down here. Now that makes sense. A, it's back into a huge base, and B, time has elapsed. So usually those are two of the things I look for. Like 20% drop, this would have qualified, but not enough time. So these are daily candles. Let me see, do I have lines? Yep, I do. Let me see if I was consistent. Yep, very consistent. Support zone, but you don't want to lose it. I didn't even draw it because I don't want to tick people off. Resistance, I just named it. What was it? 142-ish. Bigger resistance into 150. And this green line is prior failure. So I would not chase the stock if it's going into this line. If it goes above this line, I could buy it for a trade, but I would not chase it going into it. All right, so Beyond Meat, I wouldn't short it because it's done these before. I would wait for drops to buy it. And if somebody wants to buy it here, I can't say this is not a good time, because theoretically speaking, if the markets meander up, this one has the opportunity to swing back up, knowing full well that it's going to have to go through muck, like I described, through one resistance, through second resistance. So pick your entry point according to these resistance lines, either just above, or when they hit and fade, then I would load up to push through them on the second attempt. You can't time a stock. So nobody could time this knowing, hey, the headline is coming out. But you could use logic to avoid the obvious mistakes. This was an obvious potential mistake, not an obvious mistake. In the heat of the moment, I get it, but it's an obvious potential mistake. I knew I was chasing if somebody bought it. I mean, for crying out loud, the stock had already almost doubled. Why on earth would I chase it after a double? That's because emotions took hold. Down here, emotions would probably take hold and say, oof, I'm out, which would be a mistake for exactly the same reason here. It's falling into prior support. My assumption is that that support will hold at least once. They'll bounce. If they come back and lose it, now we're talking. So if you told me take a long or take a short, you can't take a neutral on it, I would take a long. How I would do it, I would own shares long term, sell calls against them. Ooh, what just happened? I would own calls, but leaps. Or more favorably for me, I would sell put spreads into fear days. Like I would pick a bad day and sell some put spreads or some puts if I wanted to own stock. If you don't know what that stuff is, join us. We talk this stuff all day, every day. We have a chat room. It's inching on 300 people in there of all kinds of trading styles, including futures, crypto, and everything. It's not free to be in there, but it's definitely free to try it out. I have a link in the description. It takes you to PayPal. Don't be scared. The PayPal is $0. I just need to know that it's real people trying to pop in. Otherwise, I'm leaving my people open to trolls. I need to know that somebody's serious. We do good work. Couple of write-ups a day, trade setups, iron condors, weekly recaps, weekly webinars. So it's worth, in my opinion, it's definitely worth the effort. Nick signing out.